Hello, everybody, and welcome back to Fast CPAs and Consultants. As you already know, here we are with our CPA, Fulton Abraham Sanchez. Hello, Fulton. Welcome back.
Thank you, Monica. How are you doing?
I'm fine. Thank you. I hope you are great as well.
Thank you.
So, for the new ones in our channel, this is a video series called Tax Talk, where we talk about the different tax strategies that you must follow according to your situation. How does it work? We receive your question through our social networks or emails, and we design a topic to answer them and help you. Today, we are going to talk about the famous real estate and all the things you need to know. And due to the number of received questions, we have divided this video into two parts. Fulton, are we ready?
Yes, we are.
Perfect. So let's begin. We have the first question. What are the tax benefits of being a real estate professional?
When you invest in real estate, there is something that is called tax shelters. We'll see that in a question at the end of this video, but the benefit of investing in real estate is that when you use real estate and you use financing, like mortgages, you have two main tax shelters. So the one is depreciation that helps you to reduce your taxes by creating a reduction year to year of the amount of the property, and that reduction is applied as an expense. As that is a huge expense, many times because it's related to the amount of the property, you're going to have less profits on the real estate activity, and therefore you want to pay less taxes. That's one benefit. The other benefit of mortgaging the property is that in interest on the mortgage of the property creates a deduction that reduces the profits of the company or the profits of the activity. So if you have a property that is for investment, this is only if you are an investor. If you invest in a property and you have a mortgage, this mortgage will allow you to deduct interest. This interest will create a lower profit of the activity, therefore allowing you to pay less taxes when you pay. There is also other benefits like you can expense out the repairs to the property, but that's something that we will take in a future question here.
Understood. Thank you. And how can I pay less taxes on real estate?
The taxes on real estate, real estate has two taxes. Remember, the real estate tax property that is related to the value of the property, and the real estate on the income tax on the profits of the real estate activity. So you have property taxes for the real estate property and income tax on the activity, on the rental income that you receive. For example, if you want to pay less taxes on the real estate property, it all depends on the location. Property in New York has a very high real estate tax compared to the properties in Miami. Properties within Miami or any other city, it depends on the location. It all depends on the location. So you want to pay less taxes for the property, real estate tax property. It is the location and the value of the property that will make up the difference. How can you pay less taxes on the rental income of the property? Is basically using the tax shelters we mentioned before, depreciating the property and having a mortgage to deduct the interest.
That's clear. And what can realtors write off for taxes?
Realtors they enjoy a special classification in the Internal Revenue Code. As they are realtors and their profession is related to the real estate, they can deduct all the expenses that they do or they incur when they are dealing with clients. when they are, the miles that they use for visiting clients or visiting the properties, they are also deductible. This convention is allowed, for example, to other non-realtors, but they are real estate professionals, but only if they have certain amount of hours, like 720 hours per year. But for the realtors, if the realtor has a license, active license, and he's actively working with clients for real estate, realtors can deduct the entire expenses for the activity. This is 50% of meals and entertainment, the miles that they use in the car for the purpose of the business, licensing that they have for the real estate license. If they have a company, they can deduct the rent that they pay for the office. And if they have property as well, they can take the depreciation for the property. All these expenses are allowed to the realtor that are not allowed to regular people because they are not dealing with real estate activity in an active basis.
I see. And what is the maximum real estate tax deduction?
That depends of the expenses that you have, and you can prove the expenses. I was in a conference call with a client, a foreign client, and they had a question if they are able to deduct the improvement of the property if they don't have receipts. The answer is no. Unless you have a receipt, you are not able to deduct. But if you have incurred an expense in the property, and this is something that you can verify, meaning that there's an addition to the property, and you know the amount of the property, and even though you don't have an invoice, you can demonstrate with the expenses from your bank account. Then at that point, the amount that you have incurred in the property is deductible. The maximum real estate deduction, it all depends of the amount of the expenses and the bill, the backup that you can have for that particular expense.
Okay, thank you. And the next question is, what are the income brackets?
After the 28 tax reform bracket changed, for singles, for example, from $0 to $10,000, they pay 10%. From $10,000 to $40,000, they pay 12%. From $40,000 to $80,000, they paid 22%. From $80,000 to $150,000, they pay 27%. And things go up until it gets to $410,000, that it ends paying 35%.
Okay.
So it goes by bracket. Now, remember that if you earn $200,000, it's not that you are going to pay automatically 27%. No. The first portion goes the $10,000 at 10%. The second portion goes to 12. The third portion goes to 22 until you get to $200,000 and you pay 27%. It goes by brackets. It's by brackets.
I see. And is passive income taxed differently?
Okay. Passive income is real estate income. What is the difference between the active income? In an active income is from an active business. For example, this activity. Whenever I am giving services to my clients, I am using my energy to provide for a consultation, for a service. That is an active income because it's an activity. Providing advice is an activity. In that case, that income is 100% deductible. I'm sorry, that income is 100% taxable, and I can only match that active income with active expenses. Passive income is the opposite of active income. Passive income is something that I do not do, but I get income. For example, rental income. I don't do anything. I just buy the property, and the property pays a rent. That's passive income. Passive income and active income are taxed the same. There's no difference. The difference is the amount of expenses that I have for deduction. I cannot commingle. I can only deduct passive expenses to passive income. That's why there's no really different taxation. What really is different categorization of the expense. For example, whenever I have passive expenses, let's say that my rental, my real estate activity has created expenses for $30,000, and those expenses are lower than my income. So I'm gonna have a loss. Let's say I have income $10,000, losses of 20. I have a $20,000 loss. That is passive income. Whenever I have passive income, the maximum amount that I will be able to deduct is $3,000.
Understood.
And I have, for example, I invest in the stock market. I invest in the stock market and I have losses. I lost $20,000 in the stock market. I will not be able to deduct the $20,000 in the stock market. I will not, because that is passive income. When I buy a stock in the stock market, I am doing nothing but that stock is paying me interest when dividends. Mm-hmm. That is also passive income. Rental income, dividends, royalties are passive income. So when I have this passive income, I receive passive income. I'm sorry, when I receive passive losses, the maximum amount that I'm able to deduct is $3,000. Coming back to the case, or going back to the case of the real estate activity, whenever I sell the house, and I have a loss in the house, complete loss, because I am completely spending out completely the loss, at that point, I am able to deduct the full amount of my passive income because I am taking away the property, getting away from the property. But in the moment that I am keeping the investment and I have losses, I will not be able to deduct but up to $3,000 of passive losses. That is the main difference between passive income and active income, is the nature how they are classified and how they are allowed for deduction when I have losses. That is the main difference.
Okay, really detailed information. We really need to be careful about it. Definitely. And we have the last question that, yes, I think you have already answered it. Is real estate a tax shelter?
Yes, it is. This is coming from the first question. Mm-hmm. It is a tax shelter because it shelters your income, but there's a catch. Whenever you depreciate the property, it does not mean that you are tax-free. Whenever you take depreciation, it only means you are deferring the taxes on that property. Because when you sell the property, you have to take back the depreciation. Meaning that I buy a property for $300,000 and it's a commercial property. Every year I am going to depreciate $10,000. So I'm going to pay from my income, from the rental income of the property, minus whatever the rental income is, minus $10,000. So obviously my taxes are reduced because I am paying less on the profits. But when I sell the property, I have to take every $10,000 that I took for the years that I own the property. So it is a tax shelter that allows me to pay taxes in this year. But when I sell the property, this year, next year, and so on, when I sell the property, I have to retake every single year of depreciation that I took. And I have to pay taxes on that because I took it in a previous year. Now that I'm selling the property, it will be taken back, and I have to pay more taxes now because it will be the addition of all the years that I have a depreciation for that property.
That's right. Well, those are all the questions for this part. Thank you everybody for joining us. We try to put together all your questions about real estate taxes, but don't worry, we're going to make a second part of this video. Thank you, Fulton, for your time and information. And remember, everybody, you are welcome to follow us on social networks like Facebook, where we have an exclusive group. You have the link of that group in the description of this video. And if you have further doubts, do not hesitate to contact us either in the comments of this video or by email. And of course, you are more than welcome to contact us, to subscribe to our channel so you can be notified when we publish a new video about taxes. And of course, when we publish the second video of real estate taxes. Thank you and see you in the next video. Bye-bye.
Bye, thank you.